All right. Hello, everyone, and welcome to episode number 1 of the Lambda Securities Power Hour podcast, where everything financial is fair game. I'm Rosario Fortunio, and I'm joined by Lambda Securities lead analyst and founder, John McAllister. John McAllister is a trading analyst, CPA, and we did our MBAs together at the University of Calgary, so he's been around the block when it comes to finance. Hey, John, it's good to have you here.
Thanks for having me, man. It should be a good discussion today.
Yeah, hopefully this is the first of many. We've got some interesting topics up for discussion tonight. Feel free to jump forward to the timestamps in the description if you're interested in one topic over the others. So the first topic is ARK's Tesla valuation. So ARK is a company that's led by Cathie Wood, and they have a number of ETFs. And they recently came out with a new valuation on Tesla, and all the headlines are saying price target of $3,000 per share. That's looking at 2025, I believe.
Yeah.
Is that right?
Yeah. No, they've had a good call up to this point. People thought they were crazy when they made their initial call on Tesla, but it's had a crazy run. But yeah, I don't know if you want to go first on your thoughts on it, because I know you're a big Tesla bull, but maybe not as much as ARK is thinking. But
yeah, okay, I'll give my preliminary thoughts on the report. I've looked at the report itself, and I've watched a number of videos on it. I think that the report relies heavily on Tesla being successful in the development of autonomous vehicles. They've essentially included zero revenue from energy services. And I actually kind of agree with that because it turns out that energy does not have that great of margins. So if they're going to be, using their batteries for Tesla energy, I think a better use of their batteries is going to be for their car business, because I think they can get higher margins with that. So That makes sense to me. And the fact is that until 2030, at least, they're going to be constrained in terms of battery production. So that's going to be the thing that dictates how many cars they can sell and how much energy they can produce. So
can I ask you quick?
Yeah.
What did you think of their cars sold? Because their bear case is 5 million, bull case 10 million, and currently they're at 500,000. Call it for 20.
Let me pull up my projections here, because I made a recent Tesla valuation. Now, right. I have to tell you, I've been very bearish on Tesla's stock for a long time until recently.
Is that just because you think it got ahead of itself?
Yeah, I didn't really understand how far out you have to look to make Tesla valuable, and what's really going on here, and because I was bang on their production targets for the last, I did a valuation in early 2017, and I was bang on. I knew exactly how many cars they'd produce, when the Model 3 would be actually out, and I was within 50,000 units every year, and I was right on in their revenue and everything. But what I didn't realize is that it doesn't matter what they make today. It matters what the growth is going to be over the next 20 years. That's what people are looking at. So it's not like you can value them based on their
right.
We're literally at the start of an exponential growth curve in the expansion of electric vehicles. So until I added all that extra time into my valuations, usually you go 3, 4, 5 years out max. And if you do that, Tesla is way overvalued. But if you're looking at 5 to 10 years and 10 years and beyond, and you're assuming that, electric vehicles are going to eventually be the majority of vehicles on the planet, which I think is basically a certainty at this point, given all the government mandates and stuff. I think that really kind of seals the deal.
Yeah, they can grow into it that way, and then
they don't even. Yeah.
Oh, I was just gonna add, if they can get autonomous figured out, because it does seem like they are the leader in autonomous, but that is a really
Yeah.
tough nut to crack. I think it's like more on the government side. Like I think they could, if you ask them to send a car across the country today, they could probably do it. It's just getting governments to allow them to implement their autonomous ride hailing service. And I think it's going to be slower than people think. I think the technology will get there, but what are you going to do with all the Uber drivers and truck drivers and stuff? Governments, they'll need to have something figured out to deal with that. So I think that's what'll slow it up, in my opinion.
Yeah, I tend to agree with you on the government being extremely slow. I think that Tesla has become really good at working with the US government, at least, because, you know, they work with them every day. Well, Elon works with them all the time with SpaceX, and then Tesla has been kind of pushing the boundaries with them, like first on their cars. Like their new car has like a yoke steering wheel instead of an actual steering wheel. So it seems like they're kind of able to tell the government, like the NHTSA and stuff, they're like, hey, we're doing this, look how safe it is. And then if they say no, there's going to be huge public backlash, right? Because everyone's going to want it. So I don't know if the government's going to be able to resist, right?
Yeah, it's like a F1 style steering wheel.
Yeah.
I guess we're more aligned than I thought we'd be on this. I think their bear case is actually attainable.
Yeah,
5
totally.
million. I think, it's going to depend on battery production, so I agree with you on that. I'm a little concerned about the rising costs, because like when you have Volkswagen, all these companies, the Chinese companies jumping in on EV, and battery technology just getting used everywhere. Obviously, we're seeing it reflected in the commodity prices, but I'm a little concerned about margins and that just impacting the number of cars they can actually sell.
So what was their 2025 bull thesis for implied vehicle production?
10 million cars sold
in 2025.
Yeah.
Okay, so for my valuation, I have 7 million sold. So, I mean, it's not that far off.
Right. I think the deal breaker for me on the bull case is just the autonomous ride hailing revenue, because they're projecting $327 billion in revenue in 2025. I don't see how that. I think you have to push that timeline out. I think they could get $327 billion in revenue one day from autonomous ride hailing.
Yeah, I think everyone's looking at that bull case number and being like, oh, well, that's their target, but that's not really their target. Their target is their base case, right? Which is, I think, $1,500 a share.
Yeah.
Which is still like more than doubling from where they are right now, but it's I think it's more realistic. But that amount of revenue from autonomous ride hailing is going to be a tough nut to crack, I think, because first you're going to have to prove the technology, which I think they're doing.
Yeah.
I think in the next 2 months or so, we'll start to get the more public rollout of the full self-driving beta. But the thing with full self-driving, even the beta, like, as far as I know, you still have to have you still have to say you're there. Like, you have to like touch the steering wheel every 30 seconds, which is what you have to do now on autopilot.
Yeah, it'll just be a better autopilot, right?
Yeah, like it does all the driving for you, so maybe they can just quickly turn that off, but they're going to need to get approval to turn that off, right? Which is going to, I agree with you on that. That's going to take some time, probably like a year or two of having that going with like no accidents, and people are going to freak out as soon as something happens to like,
one incident.
It's so crazy. Like, so of the 30,000 plus automobile related deaths in the US, like a couple years ago, you have that one with
Right,
Uber,
the
which
Uber
was
one.
a really
Yeah.
bad situation, and everyone talks about that forever. And it's like, well, how many deaths has autonomous driving prevented? In my
Yeah.
opinion, it's probably already been a lot. Even with like Tesla's autopilot, it's probably prevented a ton of accidents that would have happened otherwise.
Yeah, and that's actually a good segue into their insurance business. But actually, before we go there, I wanted to ask you about the human ride-hailing business, because in their bear case, they're assuming 42 billion by 2025. But
Yeah, I actually think that that's a fantastic idea, and I think that, well, I'm a little biased, but I think that Tesla should partner with InOrbis to get some insight into the human ride-hailing business.
I agree with you
Yeah,
there.
because we have, I mean, we don't have the amount of data that Tesla has, but we have over 1 million kilometers driven in our fleet in Alberta and BC, city to city driving in Teslas. So we have some good insight into, how to operate a ride hail business.
Yeah, you're doing it. That's kind of cool. Like ARC,
yeah,
that's one of their big ideas. They should launch like a human one, and you've already done it. Someone should.
Yeah, like, I mean, I don't
more.
know. Tesla's probably watching our vehicles and just like pulling all this data from us for free, but we've got a lot of, the ancillary stuff like dealing with customers and the interior of cars and stuff like that, which they're going to have to think about when they have a fully autonomous rideshare service. So
Yeah,
I think that, yeah, no, I fully agree with ARC on that. When Kathy Wood came out and said that they think Tesla should do a human self-drive or a human rideshare service as an intermediary to full self-driving, I was like, yeah, come talk to us. Yeah,
business model. Yeah.
Yeah, well, we've been building InOrbis since 2015, and that was the dream since then. I knew that Tesla was going to do their Tesla network autonomous rideshare, and I thought that, we could maybe provide them some insights before they go and do that, and hopefully get bought out by them at some point. But that was the goal from day one, and I'm glad that Kathy Wood thinks that is a helpful step to getting to the full autonomous rideshare.
Absolutely. Yeah, no, I think that's that makes sense, a lot of sense for Tesla. So yeah, and in the insurance business, I'm just trying to find what they assumed for that.
Well, Elon, what was Elon saying? Like, he made some ridiculous claims about the insurance business. He said it would be like 50% of their revenue or something like that, which I thought was crazy.
Yeah, it's funny. I guess, like, because in ARC's bear case, they're assuming or projecting $23 billion in revenue for insurance.
Yeah.
And in their bull case, they're forecasting $6 billion. So I'm assuming they're just planning that they'll be able to undercut all the other insurance
companies.
The
they absolutely will. And here's the reason why. So, I mean, like, there's lots of reasons why, but I have evidence. So we were working with an insurance company that was using basic driver analytics to predict, whether there were going to be accidents and what rates they should charge different insurers. And they had massive success with that. The problem is that insurance companies are so, I guess you'd call it risk averse, but this doesn't really seem like being risk averse to me. They're just so averse to change that they refuse to adopt this technology in any meaningful sense, even though it could have made them, reduce their expenses by so much. They're just afraid to make any changes to the system. So,
Right.
that's one of those industries that I think is going to be taken. It's perfect to be disrupted. Like, those insurance companies they're lumbering giants. They're not really looking at the way things could be, and Tesla has all the data. Like, they know exactly which
How you
drivers.
Drive. Yeah.
Like, I mean, to pick which drivers they put in this full self-driving beta, they looked at all the driving history for all the Teslas that these people owned, of all the people who signed up, and they're like, oh, well, these people, they drive well and they're paying attention, because they even have the camera inside a lot of the Teslas now, so they can see how good people are at driving if they're paying attention. And they'll have the data to show how safe autonomous driving is too. So if they can charge anywhere near the rates that insurance companies are charging right now and just like knock it down a little bit, I think they have a pretty big market there.
Yeah, absolutely. And if Tesla ends up over 2025 ends up kind of aligned with their bear case, insurance could be kind of like an upside area, I think.
Yeah, totally. I think I don't know the exact market sizing of that, and I didn't even include it in my valuation, but it's all upside in my opinion. Like, I don't think there's any. Yeah. There's no real downside to Tesla being in the insurance space as far as I can tell.
Yeah, and another, because we're equity guys, if you get an insurance business, you can invest those dollars you take in kind of Warren Buffett style. So maybe Elon will launch his own funds, another division.
Yeah, that's a really interesting proposition, right? Because Tesla has some of their quote unquote cash in Bitcoin right now. And, if they're getting all this revenue from insurance, they could start, creating their own fund, as you mentioned. And is that
generating a lot of returns? Yeah.
Yeah. Like in the MBA, we learned that companies are typically better off and more, I guess, have better returns in the long run if they're pure play and they don't try to get into a whole bunch of different spaces. Do you think that the fact that Tesla is like getting into so many different areas, do you think this could have a negative impact on the business?
Yeah, normally I would say like companies should kind of stick into their core competencies, but I think Elon's one of those special guys. He's already got how many companies running successfully, massive companies doing cutting edge things. I don't think he'd be afraid to jump in the investing game, and I think he'd be really successful at it. And obviously he'll be able to attract the talent. And
considering he can move the price of things just by tweeting about them, he shouldn't have too much trouble being successful.
Exactly. Yeah, and how many people would want to leave Wall Street and go work for Tesla? I think that'd be a pretty cool opportunity, and probably a lot of people would agree with that. So
yeah, like that's another reason why I'm so bullish on Tesla. Like, all the best people go to work for Tesla. Like, if you wanna go work for an innovative company and you're a brilliant engineer, where are you going? Like, you're not going to Mercedes or any of those companies, or Ford or GM. You're going to Tesla. Exactly. So they have the top people. And what I always hear from venture capitalists and angel investors is that the technology is great, but you're really investing in the people. And as far as I can tell, Tesla has the best people. So
oh yeah, their human capital lead is unreal. I think to sum up my investing view on Tesla is, I think it's good to allocate a little bit of your portfolio to it. Obviously, it's pretty risky, but I don't know. I think just having that moonshot opportunity with Elon Musk at the helm, you can't pass that up. But yeah,
I have to ask you, like, what in terms of like riskiness, like their beta is like over 2, so it like swings pretty wildly with the market.
Yeah, like the market cap and size of the company now and their cash position alone kind of de-risks it a little bit. But I think still on the equity side, you're going to have a lot of volatility, as we still kind of see, even though it is like a mega cap tech company now.
What about
So,
the fact that they have such low leverage compared to like a lot of these kind of older companies? Like Kathy Wood has been talking about how all these big companies that have been, that people might think are good deals right now, like value stocks, are like actually like about to get screwed over when rates go up because they have a whole bunch of they're heavily levered essentially, and they're just taking on more debt to pay dividends.
oh yeah, like Tesla, would way rather own or have Tesla's balance sheet than a lot of those kind of traditional companies. But I think like with the raising rates, that obviously affects your discount rate, and I think that's kind of adding volatility to the shares. But I mean, like, if you're gonna bet on a moonshot, Tesla is way less risky than a bunch of these companies that are pre-earnings and stuff like that. So, I mean, the risk tolerance of the market's really high right now. So, probably a lot of people are listening to this and are saying, oh, "What are you talking about? Tesla's one of my core kind of steady eddies in my portfolio." So, I think it's just kind of depends on the investor's tolerance and their kind of views on how they want to invest. But
Yeah, like I was gonna say, like you keep saying moonshot. Do you think that there's still room for Tesla to moon? Like I think they could like double in the next 10 years, which is like, or maybe next 5 to 10 years, which is still a decent like 20% ish ROI. So
oh
it's
yeah,
good. It's not like moon I would consider like 10x kind of thing. I don't see Tesla 10xing.
really, I
Like
think they could. I just think the timeline, you got to push out the timeline.
yeah.
Um, but
Yeah,
yeah, no,
maybe in 20, 30 years they'll 10x, but
yeah,
if you want to like go if you want to get super rich fast, I don't know if Tesla is the way to do that. Like I think they're a good long-term investment. I don't know if they're like invest in this and then tomorrow you'll be a millionaire kind of thing.
oh yeah. If you're swinging for home runs, yeah, you gotta like almost invest like Kathy does in her other companies, right? Like Tesla's her like core steady eddy. It's her number one holding. So,
Yeah.
um, but yeah, some of those
Speaking
other
of
companies.
speaking of Kathy's other holdings, maybe we should move on to another topic here. We should talk about Palantir. What do you think
Oh
of that?
yeah, yeah. No, I actually really like Palantir. I was early, so I was in on like right after it went public. I was buying a bit. Wish I would have bought more, obviously, but shoulda, coulda, woulda. I know, like, from what I can tell, everyone's knock on it is it's kind of a black box. Like, oh yeah, they have amazing data analytics and AI, and it can, and a lot of it's used for government, so a lot of people don't like that. But they are getting more into the commercial space. Um, and then obviously the stock has had a wild ride because the Wall Street Bets crowd's kind of been all over it. Um, so it's like, what did it run up to in the 40s, and now it's back into low 20s.
Yeah,
So
like I think if anything, it's a good buying opportunity right now.
yeah,
But
and again,
before we dive in, can you explain like at a 5-year-old level? Because a lot of great investors that I know, like Charles Lynch and Warren Buffett and all those guys, are like, if you can't explain to a 5-year-old what the company does, you shouldn't invest in it. So
yeah. So so my understanding, like obviously there's a lot of details we don't know, but the company is the best at crunching large data sets and scraping data. And when you're the best at that, you can apply it to almost anything that we do. And I think that's what their big opportunity is to apply that to the commercial space
mhm.
versus the government space. Like obviously their technology has been used, I think, even to help find Osama bin Laden back in the day. Uh, They've been helping ICE, which is where they get a lot of their negative press, but I think they do a lot of good things. Like they're getting into cybersecurity. Like I think they help
ICE
supply
is like
chain.
border control
Yeah,
in the
yeah,
US. Okay.
yeah.
So like you said scraping data, like it isn't that like what Google does and like other search engines? Like why is Palantir so much better at it than like Google?
See, that's the part we don't really know. They have some
Yeah.
secret sauce, and I think that's why people call it a black box. But yeah, I don't know. I think data obviously is becoming more and more valuable, and if you're one of the best in the world at using that data, and you can deliver results which they have shown, and I guess coupled too with their management team, their CEO Alex Karp is obviously a really smart guy, and Peter Thiel's in there. So I think that combination, again, like these are one of those companies you can't bet the farm on them, but I think it's a nice, like it's safer than a lottery ticket. So it has probably more upside than a lottery ticket. So to the to-do list of companies we analyze.
Yeah, we'll put that on our list.
It's super interesting, but yeah, I just wanted to talk about it because there has been a pullback. I think it's in the low 20s right now. So yeah.
By the way, you can check out all our valuations at lambdasecurities.com. We've got short write-ups there right now and buy, sell, hold recommendations, and we're gonna have more coming up in the coming weeks. So hopefully we get the Palantir valuation up there. But yeah, like as you mentioned, I'm super bullish on Palantir. I think it's a really like fantastic. Well, like you said, it's a good leadership team. The space that they're in is critical, and you know, Kathy Wood and ARK Invest is saying that there's 2 companies that could break $1 trillion in the next 5 years, and one is Tesla and the other one is Palantir. So if that gives you any idea of the growth potential of that company, then there it is.
Yeah, it's crazy how many shares she's bought in. So
what's their market cap right now? Is it like 40 bill?
I think it's higher than that. Sorry, let me see if I can pull that up here. Yeah, Palantir's got Kathy's stamp of approval, if that makes anyone feel better about it. It makes me feel better.
Yeah.
Here, I'll pull up.
I love Kathy. She's great.
Oh yeah, all of her YouTube videos she posts, I have to watch them. They're so good. I like how she's like an area I'm lacking in is like she's like an economist, I think. Like she's like really tuned in with what's going on in like the macro economy.
Yeah, she studied under a Nobel Prize winning economist.
Yeah, and I think like that, I don't know, I kind of think like we're kind of lacking that these days. Like a lot of people have like, you know, really good finance skills, but it's good to have that kind of economic view. I got a Palantir's market cap here. Yeah, it's 41 billion.
41 billion.
Yeah. And I'm showing the last close price was 22.58. So yeah, it's come down quite a bit. So not a bad.
If they get to $1 trillion, that's like almost 100x.
Yeah, the trillion might be a stretch,
50x.
but
yeah.
Awesome. Should we move on? I'm excited about the next name on our notes here. Have you heard of this company, Rosario?
Yeah, you were telling me about it last time we spoke. Why don't you give our listeners a little background? The company's called, how do you pronounce it? Coupang?
Yeah, I think it's Coupang.
Coupang.
Yeah, so I don't know, listeners may or may not have heard of them. I find like they just IPO'd a couple weeks ago, and they haven't gotten that much press, really. Not many analysts have put out price targets or anything yet, but we have. So they're kind of dubbed as the Amazon of South Korea. They're one of the fastest growing e-commerce companies. They initially went public at $35 a share, and they're trading in the low 40s right now. So they had a pop. I think it got as high as $67 a share on the first day, and it's come down quite a bit with the recent market volatility. But the company has impressive performance. Revenues from 2019 to 2020. Obviously, 2020 was a special year for e-commerce companies, but their revenue grew at 97%. And they have another cool stat that I really liked is they have over 100 fulfillment centers across the country, and that's results in 70% of the population living within 7 miles of a logistics center.
Wow. So is that comparable to like Amazon in the US?
I'm not exactly sure on Amazon's coverage.
I know Amazon's strategy is similar, right? They try to get their fulfillment centers within proximity of a large percentage of the population.
Right. And obviously it's easier in South Korea. Things are a little more congested there, but yeah, they got a really good footprint. They have their dawn delivery, so if you order something before midnight, you'll get the item before 7 a.m. the following day. So that's kind of cool.
That's pretty awesome.
Yeah, they just bought a video streaming service, so they're kind of following in the Amazon's footsteps. But yeah, in our valuation, we used a pretty conservative growth rate. We knocked it down to 35%.
Okay.
And the CEO kind of expressed like they want to try to maintain margins or improve margins a little bit. So we assumed about 20%, which is pretty good for e-commerce play like Coupang. And CapEx growth we put at 10% a year. And they're investing heavily in their business. Like they could throw up earnings numbers right now if they wanted to, but I think it's a good sign. Like I don't mind seeing large CapEx numbers if they're going to good things, and it's a pretty young company still.
Yeah. So are they exclusively in South Korea right now?
I believe so. Yeah, I haven't heard of them kind of branching outside of South Korea right now, but I don't think it'd be a stretch for them to branch into like say Japan and some of those other Southeast Asian countries.
Do they have like a secret sauce? Like why are they succeeding in South Korea where like is Amazon not operating in South Korea?
That's another good question. I'm not exactly sure if Amazon's there. I know Coupang, like they've invested heavily in like automating things as much as they can. They use a lot of AI data analytics, so they're really pushing like the tech angle. Obviously Amazon does that as well, but and then I don't know, I'm assuming they have a bit of an advantage because they're the local company, and sometimes Amazon doesn't have the best reputation.
Yeah, like I mean, I think that really makes sense for South Korea, especially because like if you look at South Korea, like Samsung has what, like an 80% market share there or something. So
yeah, they're pretty loyal. Yeah.
Yeah, they like buying local there, whereas like in Canada and the US, we're not as we don't care as much where stuff comes from.
Right. And I think like for me, when I started crunching the numbers, like when you kind of knock their growth rate down to 35%, which they should easily beat that within 5 years or over the course of 5 years. The valuation doesn't look too bad to me. Like they're trading right now at 2020 price to sales of 6.5. So I mean, that's not too bad. And with our assumptions, we came up with a price target of $82 versus low 40s that they're trading in now. So I think, and you could argue a much stronger bull case for this company. So I just thought it was kind of a neat opportunity. Not much coverage yet. Not many analysts have put out price targets yet. So another one.
Do you think that's a good diversification play? Like, does that company have a strong correlation to like US stocks, like let's say you want to diversify internationally, I wonder if it's like highly correlated to like the S&P and NASDAQ and stuff like that, or if it is maybe like a something that you could use to diversify your portfolio a little bit.
Yeah, it would probably follow the US markets a bit, but yeah, at least you're getting geographic diversification, which probably a lot of people in North America at least are lacking, because we tend to just focus on the US market. But yeah, no, that's, I think, one advantage too. Yeah, I don't have too many companies outside of North America in my portfolio. So what are your thoughts of kind of being early in on a new IPO before kind of the main Wall Street analysts jump all over it?
I think, like, if it's not super popular in the media, that's probably the best opportunity for IPOs. Like, I usually stay as far away from IPOs as I can, especially if they're hyped, because unless you can get in as like an insider and you're able to get like the actual IPO or pre-IPO pricing, like you're gonna get hosed. Like, I looked at Airbnb trying to get in at the IPO price, and there were no shares available anywhere near the IPO price. Like, I think it had almost tripled before there were any shares available. So like, the people who win in IPOs are not the, everyday retail
people buying
investors.
it in the market. Yeah,
like those people are basically the bag holders, because like, even if the company does well in the long run, it gets spiked right away, and then it will, when you can actually buy it, you're buying it like super pumped up, and then what happens over time is like options vest and all that, and then like a whole bunch of the owners will sell their shares at some point, because that's the reason you IPO, right? So that you can cash in.
Yeah, so, unless you get an allocation from your bank. Like, I agree with you. Yeah, I just thought it was interesting. Like, this name did get the nice spike.
Yeah. That being said, like you mentioned, if it's not heavily known about, like, maybe that doesn't happen as much. So it could be a good opportunity.
Yeah, like it did get that spike up into the 60s on day one. But yeah, it's pulled back to low 40s now. And their initial price, like what you would have gotten your allocation, the insider allocation, was $35. So
35. Okay, yeah, that's not too bad.
Yeah, you're not getting like totally hosed on the IPO pop.
Yeah.
So I think this is a name you could just kind of watch. Again, like with the interest rate environment, these kind of tech names, high grower names have seen volatility. So I don't know. I plan to kind of watch it, and if it gets close to the IPO price, I'd probably be tempted to pull the trigger. But that's just kind of my thoughts.
Speaking of that interest rate volatility, I wanted to run something by you. So like, I did a video on this a few days ago, and like, my understanding of why like rising interest rates or like accelerating interest rates cause tech companies to fall, or I guess growth companies to fall in general, is because you're basically the expectation is that your risk-free rate is actually increasing, which is going to increase your cost of capital, right? And so that will reduce your valuation. Is that accurate?
Yeah, I agree. And then when you discount those cash flows back, like the discount rate has a huge effect on the valuation. So I think, just as that goes up,
it's basically saying like you need to have those earnings sooner, because the further out into the future you go, the less your money, the less that money is going to be worth to you. So even if they're going to see huge growth in 30 years, if the value of the dollar basically is not worth a lot in 30 years, then it's not a good investment for you, right?
Yeah, exactly. And I think too, it's like the speed of the rise in interest rates, like they've gone up quite a bit in a short period of time. So
Yeah, I think it's got to be more the uncertainty than anything, because if interest rates were just high and they were always high, then you'd expect the equity risk premium to like adjust, and that would kind of, have a correcting impact. But I think it's that there's the uncertainty and that it's spiking, and so people don't know exactly what's going to happen, so that maybe makes it a bit muddier, right?
Yeah, and I think too, like the reason tech's getting hit is just because it had run up so much. Like I think if like tech valuations weren't so lofty, I don't know if rising interest rates would like be hitting them as hard as they are getting hit now.
What do you think about Kathy Wood was saying about the whole like kind of realignment of the P to E from, because like historical P to E's, forward P to E's have not gone above 25, and anytime they go above 25, we're looking at a market crash. But she's saying, okay, because we only expect economic or GDP growth to be now 2 to 3% instead of 3 to 5%, that's actually gonna kind of somehow allow P to E multiples to be higher. I'm having trouble understanding why that's the case. Do you have any insight on, like, what do you think of that, first of all?
Yeah, I don't know if that's like, is that a thing? I don't know. I've never heard that before, but I remember her saying that in one of her recent videos.
Yeah. Well, I don't think anyone else is saying it other than her. And like, I don't really get it. Like, if economic growth is slower, wouldn't that mean that you would lower your price to earnings?
Yeah, I don't know. I guess she's trying to say like if economic growth is slower, then you're like more willing to pay up for growth. Like the tech names, I don't know.
Right. Yeah, I guess that makes sense.
Faster.
Yeah. Because for any growth that you do get, you're willing to pay a higher premium because growth is hard to come by.
Yeah, because I think that's like what's been kind of driving tech shares. Well, the problem is we have 2020. It kind of throws like a wrench in like all your theories because it's such a unique year. Like obviously tech is going to be the number one sector because they can kind of keep doing business as usual or even like hyper accelerate their business. But
yeah,
it's kind of
I would like it is. So it makes sense that tech accelerated in 2020 for sure. I don't know if, like, I think most of the changes that we've seen were already going to happen. I think they're just pushed forward a little bit, like in terms of these like tech companies taking off.
Yeah.
And yeah, e-commerce and remote work, like all that stuff was already happening. It just, this whole situation with 2020 kind of accelerated it. I don't think it's going to go away. Like maybe it'll go down a little bit, but like it's definitely not going to go back to 2019 levels is what I'm saying. Like we're going to be at a higher level of remote work and e-commerce than we were prior to 2020. Would you agree with that?
Yeah, no, I think so too. I'm more in the hybrid camp, but yeah, it's going to be more than what was before the pandemic. So
yeah, what's your thoughts on remote work?
I prefer to be in the office, to be honest. But I would like if I could work like 2 days a week from home. I think that'd be awesome. And hopefully
I agree. Like I think that hybrid model that you mentioned is the way to go, because I like meeting face to face with people, like not over Zoom. I mean, like actually in person with them.
Yeah.
I think there's something that is intangible there that you gain by meeting with someone. And I think that, I think a lot of companies actually see that. Like they've seen, some companies have not taken a hit to productivity, but I think a lot of companies, if they're not well set up for this remote work, or they have a lot of, in-person communication that needs to happen, then, they've seen big hits to productivity. And I think having, the opportunity to do maybe half of your work remotely and half in the office, I think that's like something
it's
that
a good
lot of
combination.
people, it's a good combination. I think that's kind of a win-win, as long as you can kind of line it up. The only trouble I see is like, how do you know? I guess, you can always schedule stuff, right? But you just need to make sure that you're able to be in the office at the same time as everyone else.
Yeah, and like kind of figure out like if companies are going to reduce their office space, you just got to make sure you know how many people are showing up that day, kind of thing. But
yeah, I am not bullish on commercial real estate. I'll tell you that.
Me neither. Me neither. I feel bad
except for like Amazon warehouses. That's the only area of commercial real estate that I'm bullish on.
Yeah, warehouses should do fine. I mean, you still need stuff for inventory and shipping and all that, or even like manufacturing things. You'll need a warehouse.
But like commercial office spaces, like if companies are doing what you said and they're only having people in the office 2 or 3 days a week, like, does it
cut it by 50%?
Diminishing returns? Like, how much office space do you need? Like, how do you make a model where you can like share? Like, you'd think the same office building could be shared by like 5 or 6 companies then, because you're only using it for like a couple days a week.
Yeah, it's almost like the startup co-working spaces, where they it's like multiple companies working out of the same office. And yeah.
You remember, was it WeWork? Is that the name of the company?
Yeah, kind of like WeWork, but not like as like scammy or
not
whatever
with not with the founder who's a big scammer. Yeah.
Yeah.
Yeah, that was a shady. Well, I don't really know what happened there entirely, but I remember it seeming quite shady. So.
Yeah, it just sounded a little too good to be true, because they're just buying up expensive real estate and sharing it and making. I mean, they had good interior designers, like. But, yeah.
Have they gone bankrupt? I don't know.
No, I think they're still kicking around, because I thought the Dream Fund, SoftBank, was.
Yeah, SoftBank.
Yeah, I think SoftBank kind of bailed them out. Yeah. But yeah. Next, did you want to talk about Bitcoin? We can do this one quickly because we don't want to open a can of worms, but I wanted to get your thoughts on Bitcoin, especially because I know we're both Ray Dalio fans, and he thinks it's going to get banned in the US, and India sounds like they're going to ban it.
So, oh man, I'm of two minds on this. Like, I love Bitcoin, and I think that like crypto in general is just like, it makes transactions so much easier, and like I don't like having to rely on a bank or whoever to, especially like, okay, so I guess the question is Bitcoin going to be banned? I think that it's possible. I think that what we're going to see first is that I think the government right now is trying to leave it alone a little bit, and I think they're doing that on purpose because they're hoping that something will happen like what happened prior to the Federal Reserve in the US, which is where you have banks that do a whole bunch of like fractional reserve lending. And so they're basically, I explained this in one of my videos, but essentially what they're doing is, okay, so you deposit 100 Bitcoin into like a company like, I don't want to say any names, but we'll call it CryptoFi, and they offer to pay you 5% interest on your deposited Bitcoin,
Right.
or 5 or 6 or even 7% in some cases. So what they're actually doing is they're taking your Bitcoin as soon as you deposit it, and they're lending it out to another institution. So like another company similar to CryptoFi, they're lending it out to another company who's then lending it out to another company who's then lending it out to another company. So like if you happen to go back one day and you tried to withdraw your 100 Bitcoin, it might not be there.
Right.
And
they might not have it.
That has happened in the past. That used to happen with banks all the time. It's called a bank run. So you'd go to the bank, they have more money lent out than they have in deposits on hand. So a whole bunch of people would come in because they heard the bank might not have enough cash to pay them out. And tons of people would come in, try to take out their money as fast as they could, right? Because if the bank doesn't have money, then they go bankrupt. So everyone would go in, try to get their money out. The bank would collapse overnight, and tons of people would lose their life savings. And I think the U.S. government is betting that will happen with Bitcoin and other cryptocurrencies, so that they can go ahead and say, hey, look, this was really dangerous and awful, and look at all these people who lost their money. Let's ban it. So long story short, I think that, yes, the government is trying to do that. I do think that these companies are a lot smarter than the banks in the 1930s. Whether they will be able to avoid the same fate, I don't know. Because like these companies, they have access to a lot of things that banks in the 1930s didn't. Like they can like halt trading for a while. Like obviously that'll probably affect the price of crypto a lot if they halt trading for a significant amount of time. But you know, they can do that to try and get more liquidity. There's quite a few tools that they have that banks back in the day didn't have. So I think it is a risk of happening. And if that happens, I think the government will definitely try to ban it. I think the whole stuff around like Bitcoin being used for criminal activity, I think that's really overblown. Like the US dollar is the most the most used currency for criminal activity in the world.
Yeah, what are the cartels using?
So I mean, like, that's not really an excuse in my opinion. And like, Bitcoin is not the privacy like pantheon that they made it out to be. Like, every single transaction is available for everyone to see on the blockchain. So as soon as you know like one of the people in a transaction, then you can follow all their transactions forever. Like, we know today that the guy who created Bitcoin, or supposedly guy, it could be a guy or girl, Satoshi Nakamoto, their Bitcoin, they have 1 million Bitcoin. It's just sitting, it's never moved. But if those Bitcoins ever move, we will immediately know who Satoshi Nakamoto is. Right. Because you can see every single transaction on the blockchain. So we'll know right away. So it's not like, I don't know. It's not like this thing that is like a black box. It's
not like they're always like, oh, it's funding terrorism and all that. It's not exactly like, maybe, but they could probably figure that out. I basically
they have
agree
it
with
regulated now. Yeah.
I was just like shocked when Ray Dalio was saying it's gonna get banned. I was like, whoa. I think the main reason they're not gonna ban it right away is because they want the innovation around it, because there's so much like untapped potential. I think
Ray Dalio here, like, I think he's a brilliant guy, and I'm a huge fan of his Principles book. I think that here is one of the situations where you have to look at his incentives. So his fund is basically heavily diversified and geared towards protecting wealth, right? So they're trying to make sure that people don't lose their money. Right. They mostly take like large billionaires and millionaires funds and they invest them in ways that will not lose value over time. So his Bridgewater, their whole kind of shtick is that invest with us, you might not get the best returns, but you're not going to lose everything. And I think that makes Ray Dalio like to promote the kind of doom and gloom scenario, like things are going to collapse, because he's like, well, if stuff is going to collapse next year, then you better keep your money safe with us.
Right. We'll know what to do.
Yeah.
Yeah.
And then the other thing is that it's hard for these funds to get exposure to, like, they can't get direct exposure to crypto right now. So they'd have to have indirect exposure, like at least in the US. Like Canada now has a Bitcoin ETF, right? But
yeah,
in the US, they're not allowed to have a Bitcoin ETF yet.
Right. Yeah, they're a little slower on that.
Yeah.
Yeah, no, and I think too, like the other arguments, like, oh, all the governments will just release like the US dollar cryptocurrency and stuff like that. But they're still gonna want to like print money.
Yeah,
and so that's like the whole reason why Bitcoin's like a good store of value, because it's like there's a limited amount.
Yeah, like I don't really understand why the US government would need to make a cryptocurrency. Like essentially what the US dollar is today, it's not like they're printing a bunch of paper money. It's already an electronic currency essentially.
Yeah.
How would it be even a cryptocurrency? Like the whole point of a cryptocurrency is that it's decentralized. So if it's the US government issuing it, that's not really decentralized, is it?
Yeah, I think it might not be like a cryptocurrency. They'd probably just use blockchain technology, like implement smart contracts, get settlement times down, automate settlements, stuff like that. I think that's like huge opportunity. I know the banks are looking into it.
Yeah, the banks are all doing that. That stuff's obviously coming, but that's not where the value of, like, that's not why Bitcoin's price is 75,000.
Yeah, store of value, inflation hedge. That's why Bitcoin.
Yeah, it's because the US government printed 25% of the money that has ever existed in 2020.
Yeah.
That's why people are buying Bitcoin, because that will never happen.
Yeah. Those packages are insane. It's like, oh, here's 2 trillion. Here's another 2 trillion.
The next one, they're saying it's going to be like $4 trillion.
The infrastructure one, yeah.
Yeah, so like,
that's nuts.
To me, it's like, where do people think this money is coming from? Like, it's...
Yeah.
Like, they're not Biden wants to tax more, but they're not paying down the national debt. Like, the national debt doubled.
It's like impossible. Yeah.
The national debt. Okay. Here's a multiple choice question for you. Which of the following presidents doubled the national debt? Is it A, Barack Obama, B, George W. Bush, C, Donald Trump, or D, all the above?
All the above.
Each of the presidents has doubled the national debt, so obviously none of them care about spending.
Yeah. So I guess bottom line, we're still bullish Bitcoin.
Yeah.
And Ethereum.
Long-term bullish Bitcoin. I think it's a good store of value. I don't think Canada will ban it, because like the way that Canada's regulated it, it's like so hard to get Bitcoin that's not traceable, because like to get an account in Canada, you have to like send your ID and all this stuff. So
yeah, because they want their tax dollars, right? That's why.
Yeah, the government's gonna tax it. They're gonna treat it like an asset. Kathy Wood says that Bitcoin is most correlated with real estate.
I didn't hear that before.
Yeah, the reason for that is because it's taxed the same as real estate in the U.S.
Oh, interesting. I don't know if you heard, I just heard it on the news. A guy in Kelowna, BC, is going to sell his house for Bitcoin. And it's like,
nice,
good to go, perfectly legal.
Yeah, why wouldn't it be?
Yeah. So
Tesla is selling.
Awesome.
Tesla is selling their cars in Bitcoin now.
Yeah. I guess, if Tesla can do it, why can't you do it for a house, right?
Yeah, like I have absolutely no problem with it, except The problem is that here's the trick, right? Like I looked into barter because like you could kind of consider that barter, right? Because I thought that barter would be this great idea because maybe you wouldn't have to pay tax on it. No, you actually have to pay tax on barter transactions as if they were cash. So because this guy's getting paid in Bitcoin, he's still gonna have to pay.
Oh yeah, there's no avoiding.
He's still gonna have to pay.
Eh?
Yeah. So the government gets their cut no matter what. So.
Yeah. Just be careful on your taxes.
Yeah. If you're buying something in Bitcoin, like you gotta watch out because there's definitely gonna be some taxes involved there.
Yeah, exactly. Awesome. The next one I think we can do quicker.
Yeah. Delisting of Chinese companies and what this means for your investments. Okay, yeah. So this is a big news story, right? We're looking at like Alibaba, especially Tencent, and this already happened. I don't know if Huawei was ever traded on a U.S. exchange, but there's all sorts of Chinese companies that this is an order put in under the Trump administration, and then I guess Biden hasn't changed it.
Yeah.
I just want to clarify, this is basically clickbait because it's not going to happen for at least 4 years.
Yeah. Here's my little spiel on it. Like I love Alibaba. When you look at the numbers, I'm like, this thing is cheap. Like they're doing so many good things. I love Jack Ma. Like he's an awesome billionaire, if there are any awesome billionaires, but he's one of the better ones. I just like cannot hold Chinese stocks. I just can't. I just find the country risk and like
yeah, there's a lot of risk.
Jack Ma's missing. I just
do you know why? Do you know why they're banning them? It's not just because they hate China. It's because all the companies that are listed on the U.S. stock exchanges need to have their books independently audited, and the Chinese government will not let them audit their companies. So like, why would they trade on the exchange? Like they'd have a huge competitive advantage if, like a company in the U.S. gets audited, but a Chinese company doesn't have to be audited. Like that is,
I know.
I mean,
it's crazy.
The Chinese government is like, oh yeah, we audit them, but like, I mean, these companies are partially owned by the Chinese government, so.
I know, and the other big argument you always hear is they'll say, oh yeah, but it's audited by one of the big accounting firms in China. But the issue is like there's like so many examples of basically like false numbers. Like even the one that like a recent one that I remember is it Luckin Coffee? Like they're basically just like making up their sales numbers. It was crazy. I was like, how can you have this going on?
Yeah,
so,
like
I don't know.
I mean, this is a perfectly reasonable rule in my opinion. Like U.S. stock exchange companies on U.S. stock exchanges have to be audited by U.S. companies.
Yeah,
that's a no-brainer to me. Like China can still trade on whatever other exchanges they can get on. It's just
yeah.
It's not like you're not going to be able to trade these companies. They just won't be available on the NASDAQ or whatever.
Yeah, exactly. Cool. Well, we're on the same page on that.
Yeah, that was quick. Okay. Next one is EXRO. So this is a small company. I've done a in-depth valuation on that. You can check it out in another one of my videos. My father-in-law is the founder of the company, and he holds most of the patents that the company has. They have an electric motor technology that I think is going to revolutionize the EV industry, and you might actually see them get bought out by somebody like Tesla in the next few years once their technology validation comes through. Their technology is called a smart coil driver, and basically what it does is electric motors have a problem, and it's that they have, well, all motors have this issue really, but they have varying efficiency and power at different speeds. So as you're going faster or slower, or you apply more torque, the efficiency changes. So like if you're driving, like in a Tesla, for example, they don't have a gearbox, so to speak. They're just
Right.
one speed.
Mm-hmm.
So basically, the problem with Teslas right now is if you're driving at like 50 kilometers an hour, or you're driving at 100 kilometers an hour, you're going to get way different efficiencies. Or if you have a bigger vehicle and you want to tow something, that can be a challenge because your efficiency drops off a mountain, because you just have the motor, you just have its efficiency curve, and that's it. And you don't want to introduce a heavy gearbox and transmission, because that's a lot of parts, and weight is a big deal in electric cars, because you need to make sure that your weight is minimized, so that
the batteries are already heavy.
Yeah, the batteries are already really heavy.
Yeah.
So what EXRO has done is they have this technology called a smart coil driver, and essentially it is integrated into the motor, and it can actually alter the characteristics of the power and torque and speed curves while the motor is operating. So it's like a digital gearbox essentially. So it changes the characteristics of the electric motor and allows it to, have, for example, high efficiency while pulling a lot of weight. And then if you take that weight off, then it can adjust the curves, and then it will have good efficiency at a lower weight. So
right.
You're able to, drive at 50 kilometers an hour and have good efficiency, and drive at 100 kilometers and have good efficiency. So it's a technology that I think is going to be really critical, because batteries can get us pretty far with electric vehicles, but like battery technology, I mean. Mm-hmm. But really what's going to make the difference are things that enable us to get more range, more towing capacity, and more power from electric cars without having to continually change the battery technology. Because I think Tesla, with their new battery tech, they're going to get quite a bit more range out of their cars, but it's not quite at the point where they're going to be able to have those vehicles in all applications. Like, I still think they need a bit more to make their semi truck viable, and I think they know that too. Like, it was supposed to come out 2 years ago, and it's still not out. So they haven't even announced when it's coming out. So I think this coil driver from EXRO could be the missing piece. And the news that came out yesterday, it's just another validation. Like, I mean, EXRO is kind of focusing on smaller motors. This is with a company called Heinzman.
Is it a bike company?
Yeah, well, they make electric motors up to 30 kilowatts. So they go into like electric bikes and stuff like that. So they've got stuff for industrial machinery too. So they've got synchronous drives, DC drives, bicycle wheel hub drives, and system solutions. So it's like a German company. They make e-bikes, cargo bikes, electric mobility, industrial motors. I think, like, based on my market sizing, that's not really where EXRO is gonna make a big impact. Like, I think the automobile industry is much larger. Right. But I will have to look at the industrial section, because I think the industrial motors area could be big. And right. Like, a lot of companies have looked at their technology, and once they see it, they're like, holy crap, like, we got to put this in our we got to partner with you guys and test this technology. So I think it's a big deal. And I know for a fact that there have been companies that have tried to, like, replicate the technology even before EXRO had patents, and they worked for a year on it and couldn't do it.
Okay.
So
they're onto something. And
I think, yeah, one, they have the patents already. They've got, like, I think they have 25 or something patents already and a whole bunch of patents pending. And so they have that protection there. And then the technology and the leadership that they have, I think, is going to, potentially make this a game changer for the electric vehicle industry. So I'm extremely bullish on this company.
Yeah, no, I think it's awesome because they're traded on the venture exchange in Canada, right?
Yeah, they're on the TSX Venture, which is like typically small caps. I don't know what the limit is for market cap, maybe 5 billion or something like that. I think they're
before they get bumped up. Yeah.
They're under $1 billion right now. They were at $1 billion for a while, and then this short report came out, and it's kind of funny because I looked at the company that wrote the report, it was Mariner Research, and like they have I think it's like a 0.2 rating on Google. And basically all they do is they do a bunch of research, whether it's accurate or not, on companies. I think they've done it 6 times now, and then they heavily short the company, put the research out on like Seeking Alpha, and then wait for the share price to drop and then collect their money and then get out.
They're lucky the Wall Street Bets boys aren't aware of EXRO.
Yeah, I've been trying to get their attention, and there's actually a Reddit thread about EXRO, and my video got shared in there quite a few times. And cool. So I'm hoping, like the EXRO price has been climbing back slowly, and I think it could break $10 before the end of the year. So if you're looking for a quick 2-3x stock, that this could be one.
Yeah. The cool thing about the venture exchange is, like we were talking earlier about how you can't get allocations for IPOs and all that. Well, the venture exchange, like the company went public, but this is like early stage, like a lot of like pre-revenue companies even. So yeah, I think it's kind of cool.
That's one disclaimer on EXRO. They are pre-revenue, so they haven't actually. I mean, they have sold some of their smart coil drivers, but they're not including it in their revenue yet. Right now, they're basically going out to all these different partners, not giving them any exclusivity agreements, and just saying, hey, validate this tech and then come back to us, and we're going to
do some deals.
Like, I think once these deals start coming in, like I can imagine that'll be happening in late 2021, early 2022, once all these validations end. Like by then it might already be too late, because I think this once they announce those, the stock price is just going to rocket.
Right. Here's my issue with the short report. Well, one, they targeted like a really small company where you can like easily move the share price.
Yeah.
2, like a lot of their claims are like, oh, they're just all marketing, yada yada. But I'm like, well, what? Like they're like an early stage company. Like that's all like early stage companies do, or like what else are they supposed to do to get like their initial contracts and sales, right?
Yeah.
And then the thing that you mentioned is they're like letting all these companies basically use their tech and prove it out. They must be confident that it works, right? So yeah, no, I think it's a really.
They also raised like I think 40 million or something in an equity raise earlier, just at the end of 2020. So like there's a lot of people who believe in the company, and they wouldn't have people investing if they didn't see that the technology was sound.
Fully. And it is in the sweet spot of the market, right? Like EV.
Yeah, this is the industry right now. Like if
this company was in the US, it wouldn't be this small, right?
No, if it was in the US, like this would be, oh my goodness, like companies like Nikola with no technology, no patents, no engineers, no nothing, were like trading at multi-billion-dollar valuations.
Yeah.
I think if EXRO was on the any of the U.S. stock exchanges, they'd be huge right now.
Well, they probably will, and like once they get bigger, they probably will end up on a U.S. exchange.
Yeah, I'm sure they'll be there. This is probably a good time to get in before they get onto one of those U.S. exchanges.
Yeah, I've been meaning to pick up shares, but I always forget to. But yeah, now I'm looking at it, I'm like, ooh, it's at a nice level. Because it had a nice run up there. I'm like, oh, thank you, short report.
Yeah,
it gives me a second chance.
If you want to get a good opportunity to get in, the short report is actually maybe a blessing in disguise for that.
Yeah,
but like, I mean, make sure you read the short report, read what they say, see if you think it's believable. Like, I read everything and I'm like, there's nothing here. Like, really, a lot of their stuff was that, oh, these partners are no good, and then like literally the partners came out and like, you guys didn't even go to our office. Like, they just made stuff up, so it's not like they were saying that the one company in Mexico didn't have any offices, but they were like they went to their PO box instead of their actual head office.
Yeah, like, oh, it's just a PO box.
Yeah,
and they have multiple companies they're working with, so.
Oh yeah, there's like over a dozen partners that they have, and some of them are huge players, like Zero Motorcycles. There's all sorts of companies.
Yeah.
And I want to give a quick shout out to what are those guys called? Zach and Jesse from what's their channel? It's one of my favorite YouTube channels. Now You Know. They've actually interviewed the CTO and a few other people at EXRO multiple times on their channel, and I had no idea, but they're a pretty big YouTube channel, and I think they have over 100,000 subscribers, and they've been following EXRO and they've been talking about it for some time now. So shout out to them for that.
Link that video.
Yeah, I'll link that in the description.
Yeah, that'd be awesome. I want to check that out as well.
Yeah, take a look. Okay, one more topic here. It's been all the rage. I don't know if you've heard of these, but they're called NFTs or Nifties.
Yeah, I watch CNBC all day, so yeah, I've heard of them.
So NFT, for all of you who haven't heard of it, maybe zero of you who haven't heard of it, stands for non-fungible token. What that basically means is fungible means that you can take two things and switch them and you can't tell the difference. So like a US dollar, for example, you can trade $1 for 4 quarters and they're exactly equivalent, or you can trade $1 bill for another US dollar bill. They're exactly equivalent. You can't tell them apart. There's no, like, technically you can tell them apart, right? Because they have a serial number, but nobody would really use that serial number.
Don't care.
Yeah,
you don't care. Yeah.
But the point of these non-fungible tokens is that you have this secure token similar to Bitcoin. They're actually based on Ethereum, but similar concept. But that token is actually tied to a digital asset. So like a picture or like something that you can have,
like memes and stuff,
and
right?
say you own it. Yeah. Start off with GIFs or GIFs. I don't know how you say that. And lots of photos. And now, like, NFT art has been selling in the millions of dollars. One sold for 69 million or something like that. The NBA sold a bunch of NFTs. The great thing about this technology is that it's here. Okay, I want to be as positive as I can about this because I'm gonna tear it down in a second. But
okay. I like it.
I think it's really good for artists because with NFTs you can kind of divide up your art and you can sell it out to a whole bunch of people and they can all own a piece of your art, and then anytime they go to sell their token and it raises the value of your artwork, you can hold on to your portion of it. So like normally if you're an artist, you make a painting, you sell it, then you're done, right? You never make any more money from that painting ever again.
Mm-hmm.
But with NFTs, you can keep making money because the value of your art goes up over time, and you can hold on to your tokens, and you can sell off some of those tokens, or you could issue new tokens, or over time. So like as your piece gets more valuable and is sold, you actually gain from that. So I think from the artist perspective, NFTs are actually really cool, and maybe like a good way for artists to make, continuing revenue off of their work, which I don't think was really possible up until now.
Mm-hmm.
So that's the plus side of NFTs. The downside of NFTs is that, like, I don't know, like you don't own anything. You literally you can literally, it's a digital file. Anyone could copy it. All you own is, it's literally a flex. It's bragging rights. It's like you get to say, oh, I have the picture of Michael Jordan doing his first dunk, the NFT of this picture, and you can scan a QR code that proves that this person is the real owner of that.
Right.
Your name will come up, right? That's what it is. That's why it's literally like bragging rights to say you own it. So it's like you go to somebody's house, you look at a painting, you're like, oh, is that a real Michelangelo painting? And they're like, yeah, it is. And you really have no way of verifying it unless you're like an art expert, right? But with an NFT, you can say, oh, is that the real, like, LeBron James first edition dunk? And you can just scan the QR code and it tells you that, yes, indeed it is. So that is what makes NFTs great. But at the same time, like, who cares? Because it's not like it was brushed by a certain individual, because it's a digital file. Like, every copy of that is literally identical in every way. So
yeah, it's not.
I don't understand. It's not actually unique, but
yeah, that's where I struggle with it too. And then, like, like, I'm not an art expert, but like, when you go to the Met, and you see all those really old paintings, and you're just like, wow, like, this stuff is so old, and like by these like really famous historical artists. Mm-hmm. But like the NFTs, it's like, who decides, like, what's the guy who got the 67 million? It's like Beeple.
Yeah, Beeple. I think that guy's pretty famous though, isn't he? Like, he was already a digital
yeah,
artist.
And like his art's cool. Like, I seen some of his stuff. I was like, oh, that's cool and like creative.
Was it?
But like,
did you hear that Logan Paul got $3 million for his NFT thing, his NFT artwork that he drew? Like,
yeah, I think get, like how...
maybe long term it evolves into something, but I think short term we're gonna have a lot of bag holders, like a lot of people who paid a lot of money for these things, and are they gonna continue to go up? Maybe.
Yeah, I think it'll be mainly like rich people ahead of the curve spending money on this stuff.
I think we should NFT this podcast, because this is episode 1, and like maybe this turns out like the
maybe someone
Joe
will
Rogan
actually,
show at some point, and then it'll be worth millions, right?
Hey, you never know.
Get your NFT original episode 1 Lambda Securities Podcast.
Yeah, absolutely.
You never know.
No, that's awesome.
The other thing with NFTs, so yeah, one more little comment before we close. So, do you know why these things are going for such high prices? I can explain it. It's not because people are actually paying $69 million for, like, I don't think any one person actually paid $69 million.
It's early crypto people.
Yeah. So here's my understanding of what's happening. So, like, the way that they're doing this is, like, there's not actually only one NFT. Like they're issuing like a whole bunch of little pieces of ownership of stuff. So like for some of those NBA things, like there can be a whole bunch of people that own that one digital artwork. So it's kind of like a share that you get in it. And what happens is they're issuing most of the shares to the artist and to the person who's actually creating the NFT. And so they're making a whole bunch of them, and then they're buying up a whole bunch. So there's a very limited supply. So basically what they're doing is they're creating an artificial supply constraint, and that drives up the price. So because there's not very many of those tokens available, then people start bidding on the few that are available, and that drives up the price. So then like the value that those guys hold with their NFTs is much larger, much higher. So they're kind of, it's a little sneaky. I don't know if it'll work long run, because if they try to sell all their tokens, like that'll drop the price. So I think they just kind of have like paper value right now.
Yeah. Well, it'll be interesting to see how it develops. I think it'll lead to other things.
Yeah, I think it's cool technology. I think it'll exist for a long time. It's probably going to find its niche applications, and it might be, it might have applications that we haven't even thought of yet. But should you go out and buy?
Yeah, it might help drive like applying like smart contracts to like real estate and some of that other stuff.
Yeah, there's a lot of interesting applications for Ethereum and Ethereum-based tokens and stuff like that. So I'm not bearish on the technology. I'm very bullish on the technology. I'm very skeptical of these initial NFTs that have been issued and whether they will hold or increase in value over time.
Yeah, exactly.
I would say.
No, I basically agree.
Yeah.
You know a lot more about it than I do, but yeah, it's interesting. I think it'll be good to watch. It'll
be good to watch and follow. But yeah, pick up your first edition Lambda Securities NFT, and it could be worth millions one day. That's all I have to talk about this evening. I mean, I could go on for hours about some of this stuff, but I think we've made a good dent in some of the topics we wanted to.
We'll have to do it again.
Yeah, let's do it again soon. Thanks so much for joining us on this first episode of the Lambda Securities Podcast. We will talk to you guys in the next one.